for me, for Bitcoin, it's saying, okay, well, I still believe that even though the Fed will be reluctant to print money for years, eventually we'll get in such a bad recession or depression they're going to be forced to. And therefore, fiat currency, again, is going to be diluted more and more and more. I think in general, this is the beginning of the final leg down in crypto. We're still going to go lower. I have it priced to go maybe down to 9,000, 10,000. But I think this will be the final flush. I think that when we bottom out, it will be a combination of regulation that gets us out, as that will draw big money into the space. That is an epically big shock to the global economy as well as the domestic economy. And I do not think that, a small recession is all we're going to get here. I think that this is going to be a tidal wave, but I think that you're going to hit a wall very soon and you're going to see this very nasty recession come in. And the problem is the Fed cannot print money now, right? Inflation's 7% right now, 7.5, whatever it is. I think 7.7 was the last CPI reading. I mean, even at 5%, the Fed still can't print us out of a recession because it would then shoot inflation much, much higher. So you have this really tricky scenario where I think we could be mired in a recession that lasts for years.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin. Soloway shares his thoughts about the recent mass panic triggers $1 trillion crypto price crash and short squeeze warning, as FTX's FTT goes into freefall, dragging down other cryptos. The drama between FTX and Binance have worried the Bitcoin and crypto community, who fear the clash will spill over to the wider market. Fears of contagion from the public spat between Binance and FTX have gripped the cryptocurrency market, resulting in an aggressive sell-off in FTX's token, FTT, as well as Solana, which is one of the largest holdings of FTX's principal trading firm Alameda Research. FTX and Alameda both scrambled to calm fears of another Three Arrows event after Binance chief CZ announced he would liquidate his FTT position. This continues to unnerve traders in a space so driven by sentiment. Before listening to him, please ensure to smash the like button and subscribe to the channel.
What is your view on FTX?
Yeah, so I mean, really earth-shattering type stuff going on there. I mean, so many investors losing money, and we're not talking about just small investors. There was big money involved with investments in FTX, and obviously they're going to probably get zero back as well. So I think if there's anything positive to take from this, and this is definitely not a great thing, but the positive would be is that it's going to force the regulators to get some framework out to create transparency. And the biggest thing for crypto is that after FTX, there's no one with big money that is going to come into the crypto sector until there's regulation. So as bad as regulation, as much as we don't want over regulation, we need some sort of kind of framework that creates more transparency. So investors, when you put your money on an exchange, you shouldn't have to worry if it'll vanish tomorrow. That should not even be a thought. The only thing you should be worrying about is your investment in Bitcoin or Ethereum going to go up or down? So I think that's the key. I think in general, this is the beginning of the final leg down in crypto. We're still going to go lower. I have it priced to go maybe down to 9,000, 10,000. But I think this will be the final flush. I think that when we bottom out, it will be a combination of regulation that gets us out, as that will draw big money into the space. I do think that there will be more entities that go bankrupt. I'm looking at FTX as being kind of the biggest of them out there. So I think that you'll have a lot of ancillary, companies that are smaller that had investments with FTX. Last week we heard about Genesis and some of these other ones. So I do think that there will be more bankruptcies, but my guess is, and my hope is that FTX was the biggest. And this is kind of, to me, this is the Lehman Brothers event. If you go back to 2008, during the financial crisis, Lehman Brothers went bankrupt. It shook the world of investors, but ultimately it was the beginning of the end. You flushed for about 6 more months in the stock market before putting in an epic bottom. And from that bottom in the stock market, we went up hundreds of percentage points to the all-time highs that we saw in 2021. A lot of projects will go under. I think that, again, funding for projects is going to dry up. I think that people are going to become much more selective in a bear market right now in what they invest in. But ultimately, I still think Ethereum survives. I think Bitcoin survives. And I'm sure there's a handful of other coins that have major use cases that will survive. So I think that, again, one of the things, and we saw this in 2018 and 19 after the 2017 big bull run, is that everyone was saying, you know, when it was trading, when Bitcoin went back to 3,500, oh, Bitcoin's done, crypto's over. That's actually what I look for to tell me that we're getting close to a bottom. It's not a bottom yet. I want to be very cautious on that. I still think Bitcoin's going down further, but like I said earlier, this is the beginning of the last flush. I think, again, flush down to 10, maybe 9, and then I think there you start to put in a bottom. But for me, for Bitcoin, it's saying, okay, well, I still believe that even though the Fed will be reluctant to print money for years, eventually we'll get in such a bad recession or depression they're going to be forced to. And therefore, fiat currency, again, is going to be diluted more and more and more. And you're going to need something like Bitcoin. You know, gold is great, and I'm a huge gold fan. But I also think you want a digitalized gold where you can buy and sell it very, very quickly versus if you buy, I mean, yes, you can buy an ETF that tracks gold. You can buy the gold futures. But if you hold gold, it's not that easy to sell it and buy it versus Bitcoin, which gives you a little bit more freedom. So that's kind of the line I'm on right now in terms of fundamentally, I think absolutely Bitcoin has a case. Ethereum has a ton of things built on it. Those definitely will survive. And I think the value comes in on this flush.
What are your thoughts on Sam Bankman-Fried, the person?
So, I mean, that's such an interesting kind of aspect because, to be honest, I don't know enough about him to pass judgment. I think that, you know, the question is, did he know what he was doing was seriously wrong? Or was he in this position to where he thought he was invincible and he would just be able to maneuver these assets and get out? And then obviously during a bear market, you know, kind of the issues show up and it creates the catastrophic collapse. So again, it's really tough to see, but I think the bottom line is anyone that's a custodian for billions and billions of dollars needs to build their team correctly around them, where they actually know the legalities of it, they know the rules, they know what they need to do, and it doesn't seem like he was doing that, and I think that's the major issue. So he needs to be held accountable. There's no doubt about it. He 100% needs to be held accountable.
He's guilty of fraud, in my view, it seems, from the outside. I mean,
certainly, yes. If he was misappropriating funds, then there absolutely has to be repercussions for that. And again, you know, I'm sure that the Attorney General is looking into that, and I'm sure, you know, listen, if there's one thing I know is that the government wants to make a case against the crypto industry to kind of make it like the poster child for don't do this again. So I fully believe that there will be repercussions here. My guess is the district attorney is just building that case. They want it to be a dead-on case before they start, you know, taking it to the next level. The question is, if you leave money on an exchange, what exchange is the exchange you want to leave it on? I would generally, and I'll tell you this, I have money on Coinbase. Another one is Kraken. Kraken supposedly gets audited 2 times a year. Coinbase is a publicly traded company, so you would assume that they're held to a higher standard because of the SEC's involvement. So, you know, it's very risky right now to be having money on an exchange, but I will admit that I do have money on Coinbase, and I feel a little bit safer by doing that because they are a publicly traded company under the umbrella of the SEC.
Bitcoin has been dragged down. You mentioned earlier you do see Bitcoin going down further a little bit. How far do you think Bitcoin could go down price-wise?
Yeah, so for me, it's really looking more and more. So there's going to be major support around 12 to 13,000, but I do think it even breaks that and probably gets to about 9,000. I'll show my chart here to give us all kind of a basis of the thought process here. So number one, with Bitcoin, if we look at the comparisons between Lehman Brothers collapse and FTX, there was about 5 to 6 months where it took for it to bottom. The stock market, the S&P, dropped about 45% further once after Lehman Brothers announced. And so by doing that math, it comes out to be about $9,000 where Bitcoin would bottom, and that would be a bottom in around May of 2023. And then the other interesting thing is if you zoom out on the chart, if you look at a trend line going back to before the 2017 bull run, the lows of the bear market in 2018, the lows of COVID here in 2020, there's a trend line that comes here. There's a downsloping one from this pivot to this pivot, and they both kind of coordinate right underneath $9,000. So for me, that's kind of giving me, you have the fundamental side of mirroring the Lehman Brothers collapse, and then you also have the technical trend lines of returning to kind of these scenes of the crime, where these kind of, the Bitcoin chart really bottomed out and began to move up. So to me, it makes sense that you're looking at about a $9,000 target before all is said and done. And I think, by the way, I think one of the cool things about that is that it's really not that far away. Percentage wise, yes, it's a decent percentage drop from here. But I mean, when you think about Bitcoin at 69,000 to 16, and now you're talking about 16 to 9. I mean, it's literally like comparatively that tiny of a move. So as a bull long term on crypto and on Bitcoin, I'm excited. I'm like, okay, now we're getting close to the bottom, hopefully. What I'm thinking is that once we get transparency and regulation in the crypto space, you're likely going to see this pivot where Bitcoin becomes much more gold-like. And what we know about gold is that when there's uncertainty in the economy, when things get scary, people love to go to gold as a safe haven. So I'm guessing that Bitcoin will have that pivot in 2023 where it actually starts to do better. Even when the stock market drops, you might see buyers, institutional buyers, going to the safe haven of Bitcoin. Now, we still have a long way to go to get there because you need regulation, you need transparency, you need trust. But I do think that that will probably happen in 2023.
And what does that mean for the broader economy?
Yeah, so the broader economy, I think, is in a lot of trouble. I mean, if you look at the Fed funds rate, which basically less than a year ago was at 0.25%, quarter basis point, and then we've gone to 4% in such a short time frame. That is an epically big shock to the global economy as well as the domestic economy. And I do not think that, a small recession is all we're going to get here. I think that this is going to be a tidal wave. I still think you have people spending on credit cards that they paid down during COVID. They saved money, all these things. They wanted to go out and travel, so it was very stimulative. So we've kind of stayed out of that recession-ish type thing. But I think that you're going to hit a wall very soon, and you're going to see this very nasty recession come in. And the problem is the Fed cannot print money now, right? Inflation's 7% right now, 7.5, whatever it is. I think 7.7 was the last CPI reading. I mean, even at 5%, the Fed still can't print us out of a recession because it would then shoot inflation much, much higher. So you have this really tricky scenario where I think we could be mired in a recession that lasts for years. And then basically what we saw in 2008, 2009 was it was only about a 1.5 to 2 year recession. And then the economy was ripped out of it because the Fed started quantitative easing, right? So that's one of the keys, is to keep in mind that every recession we've had now for decades almost, the Fed has printed us out because inflation has been low since the 80s. Well, the question then is how long could this recession be if the Fed isn't able to print us out? And I would argue that you could be in a 5 to 10 year kind of recessionary environment where you don't see new all-time highs in the stock market for 10 years. What is it going to look like for the average person? I mean, unemployment's going to go up probably north of 10%. Again, comparatively, that's a major move up in unemployment. I think you're going to see a lot of companies that have been able to borrow money to stay afloat, because again, borrowing costs were so little that they could just borrow another $1 million, $5 million, $10 million to keep the businesses running. They're not going to be able to do that. So you're going to see a lot of bankruptcies going in. There's going to be a lot of stress in the system, corporate debt, a lot of issues there. So I think there's a chain reaction that's going to get set off. And then the question is, how bad does it get before the Fed does come to the rescue? Because if you think about it, if let's say inflation's at 4% and unemployment's at 4%, well, the Fed's not going to print money. But what if you had inflation at 4%, but unemployment at 20%? You can't tell me the Fed's going to sit by and not print us out if it got that high. So it's all about the severity of it, which is then going to cause the Fed to eventually come to the rescue, which I think they'll be forced to do. And it just brings me right back to, well, what's the safe investment here? Well, probably gold, metals, and ultimately, eventually Bitcoin. Eventually Bitcoin would be a safe haven as a commodity. This is always the tricky thing, is will the government overregulate? Well, we know from history, generally they do a little bit. My hope is they don't do it too much, because obviously you don't want to stifle the expansion of cryptocurrency and how good it can be with the blockchain and everything like that. But I think that for the most part, it's kind of a double-edged sword, because without any regulation, no institutional money is going to come into the space. And when I think about it, I'm like, okay, pension funds have trillions of dollars. Institutions have trillions of dollars. If they were just to take, let's say, 3% of their assets and say, okay, we're going to diversify into Bitcoin, Bitcoin's $500,000, maybe $1 million per coin, right? But if they overregulate, does that take a little away? It might. But again, to me, it's like, well, which is the worst, the lesser of the evils? And for me, it's regulation. I would rather have regulation than no regulation, because let's be honest, human nature, unfortunately, we've seen it again with Sam Bankman-Fried. You can't trust. Without like strict audits, you can't trust. There needs to be audits at least twice a year, maybe quarterly audits of these places, so that we actually know what's on the books and what's being done.